Okay, this is going to be a homework walkthrough for chapter 9-1. We'll start with question 1. Puget Sound Divers is a company that provides diving services such as underwater ship repairs to clients in the Puget Sound area. The company's planning budget for May appears below. And they give me all of this information, and you'll note some things are mixed costs and some things are fixed costs, so we'll need to pay attention to that as we're working through this. I'm just going to start by taking all of this data and putting it in cells where I can reference it. So my budgeted diving hours are 400. My revenue is 160,000. And that is $400 times Q. My expenses, wages and salaries are 60,200. And that is 11,400 plus 122 times Q. And Q just means the quantity. So supplies are 1,200, which is $3 times Q. Equipment rental, 11,700, which is 2,100 plus 24 times Q. My insurance is just 4,100. And my miscellaneous is 1,086, which consists of 510 plus $1.44 times Q. My total expenses then equals parentheses, adjust the expenses added together, 78,286, and that's how I double check to make sure I didn't type any of these numbers in wrong, is that this total equals the total they gave me. And then again, just double checking my work, I'll take the revenue minus the expenses to get the net operating income of 81,714. Matches the information they gave me. So that's my planning budget, and that's just information they gave me. Okay, so now I'm supposed to do my flexible budget. And so right here it says during May, the company's actual activity was 390 diving hours. So right here, this first line is going to be our actual diving hours, because our flexible budget is based on things we think are going to happen, but it's also times the actual units of whatever it is. So this one, actual diving hours. Okay, so there's my 390. That's where I got that number from. Okay, so now my revenue will equal this 400 times my actual hours. And now for my expenses, it's going to be somewhat the same. Wages and salaries. Remember, there's a fixed part and a variable part. So I'm going to go equals the fixed part plus parentheses the variable part times the actual diving hours. Close parentheses for 58,980. Supplies is just going to be equals that $3 times the 390. And then my equipment rental will equal the fixed portion plus parentheses the variable portion times the actual diving hours. And my insurance is just going to be my insurance, because how much it costs. And my miscellaneous will be equal the fixed portion plus parentheses the variable portion times the actual diving hours, close parentheses, enter. Okay, so I know in McGraw-Hill they do this for you, but I'm in Excel, so I'm going to add up just my expenses, and then I'm going to take my revenue minus my expenses equals my net operating income. Okay, so that's all you have to do for question 1. Okay, question 2. Quilcini Osteria farms and sells oysters in the Pacific Northwest. The company harvested and sold 7,400 pounds of oyster in August. The company's flexible budget for August appears below, and they give me all of the information where you've got some variables, you've got some fixed. So we're going to take in all of that. So that is my flexible budget. And then they also give me the actual results on their income statement, the actual pounds, the revenue, expenses, and all of this. Okay, so again, first thing I'm going to do is put all of these numbers down here. So actual pounds, 7,400, revenue, 31,080, packing supplies, 2,960, oyster bed maintenance, 3,500, wages and salaries, 5,930, shipping, 4,810, utilities, 1,300, other was 514. Okay, so again, we're going to just double check that my inputting was correct. 19,014, okay. Then my revenue minus my total expenses, 12,066. Okay, so I got them right. And now I'm going to just put in the income statement information, 7,400, revenue of 27,100, packing supplies, 3,130, oyster bed, 3,360, wages and salaries, 6,340, shipping, 4,540, utilities, 1,110, other of 1,134. And I double check my inputting. So add up all of my expenses. Okay, and then I'm going to take my revenue minus my expenses, 7,486. Okay, so this is all the information that they gave me in these two charts, and in this particular problem, they gave us the income statement, so I didn't need to worry about all these extra numbers that they gave me like we did in question 1. All I need is this information that they gave me. So now, what they really want you to figure out is what are the spending variances. And so the revenue and spending variances, sorry. The revenue and spending variances are simply the difference between what you thought should happen and what actually happened. And so we are going to take equals the revenue that I thought I should get. Oh, wait a minute. Let's go the other way. Okay, let's take the revenue I actually got minus the revenue I thought I should get. And it comes up with a negative 339.80. And you have to be really careful on these things and pay attention to whether you're talking about a revenue or an expense. And depending on which way you subtract it, it could end up negative or positive. So sometimes it's easier to just look at the numbers themselves and to decide favorable, unfavorable, or none. And so what actually happened was I earned 27,100 when I thought I should earn 31,080. And so that is unfavorable, right? Because I thought I was going to earn more and I earned less. So that is unfavorable. Okay, so expenses. Now with expenses, if I take, let's see, what I thought should happen minus what actually happened, then I'm getting a negative, which that is unfavorable because what I thought should happen was 2,960 and what actually I spent, now we're talking about expenses. So what I spent was more. And so that is unfavorable because we don't want to spend more money. Um, okay, so now if I did that right, I should be able to drag this formula all the way down to the bottom and make it do all the calculations for me. So if you see, I just took that formula, um, what I thought should happen minus what actually happened. And then I just grabbed that little teeny green box right there and dragged it down. And it did all the math for me. And this is why I love to set it up in Excel. So now let's investigate each one. So this is expenses again. I thought I was going to spend 3,500 and I actually spent less. And so that is favorable. I always love spending less money. Wages and salaries. Now, you got to think about this. You're the corporation. So this is an expense for you. This is not money you're earning. You earned revenue. This is an expense for you. And so we thought we were going to spend 5,930 and we actually spent more, 6,340. So that is unfavorable because we spent more than we thought we were going to. Okay, shipping. We thought we were going to spend 4,810 and we actually spent 4,540, which is less. And so that is favorable. Utilities, we thought we were going to spend 1,300. We actually spent 1,110, which is less. So that is favorable. Other, we thought we were going to spend 514. We actually spent 1,134. That is very unfavorable because we spent way more than we thought we were going to. And then the total, again, this is, I can do this two ways. I can do the total, subtract from the total, or I could add these, or I could do a sum of these numbers because they're positive and negative, and I would get the same 600, which if you look at this, I thought I was going to spend 19,014 and I actually spent 19,614, which is again unfavorable. Net operating income. Now, here's an example. This is a positive number, right? But if we look at this number, 12,066 is what we thought we were going to have for a net operating income. And we only have 7,486. So this is unfavorable because we earned less than we thought we were going to. And it just depends on which way you subtract it. So unfavorable because what actually happened, we did not earn as much as we thought we were going to. And now I'm going to point out again a really important part on this, the next few assignments. You input all amounts as positive values. So even these numbers are showing as negatives and positives here in my worksheet, When I input them into McGraw-Hill, I would put in positive numbers. So no negatives on this assignment, just positive. I hope that's clear. Okay. I believe that is all we need for question 2. Okay, question 3. Via Gelato is a popular neighborhood gelato shop. The company has provided the following cost formulas and actual results for the month of June. And so they give me all of this information for my revenue and expenses. And I'm just very first going to take and put all of this into where I can reference it. So for revenue, it's just variable and it's $28. And the actual total of June, 171,540. Raw materials, the variable part is 6.25. And the actual is 40,530. Now wages, we have a fixed part of 7,200. See right there, that's fixed part. And a variable part of 3 for 26,300 is the actual. Utilities. Fixed part is 3230. Variable part is 1.8. And for a total of 15,000. Rent is just fixed, 3,200. The actual was 4,200. Our insurance is just fixed, 2,950. And 2,950 right there. Miscellaneous. 810 is my fixed. $1.95 is my variable for a total of 12,890. Okay, so that's my actual, and these are my variable and fixed that I will use in a moment. Okay, so what else are they telling me? While gelato is sold by the cone or cup, the shop measures its activity in terms of total number of liters of gelato sold. For example, wages should be 72,000, or sorry, that's 7,200 plus $3 per liter of gelato sold. The actual wages for June were 26,300. So my actual wages are 26,300. Too many zeros, I put too many zeros. Okay. And so again, my budgeted is 7,200 and $3 per liter. Okay, that will come into play later. They expected to sell 6,200, so that's the budgeted 6,200, but actually sold 6,400. Okay, I think I pulled out all of the numbers where they're not going to get lost. I'm going to be able to figure this out. Okay. So now they want us to fill in, so the answers you're going to input into McGraw-Hill are the variance and then the favorable, unfavorable, or none. I made this chart so that I can quickly do the budgeted, the actual, and find the variance. So my budgeted revenue should be equal to, equals the actual liters times my revenue variable. Okay. And then my actual is right here. They gave that to me. And so my variance is going to equal budgeted minus actual. Okay, so again, this is revenue, and I thought I was going to earn 179,200, but I didn't. I only earned 171,540. So my actual revenue is less than what I thought it should be. So that is unfavorable. Okay, my expenses. So my raw materials is just variable. So it's going to be my actual liters times my variable portion of raw material. And then what actually happened right here, raw material. And so equals budgeted minus actual. And so I thought I was, and now we're talking about expenses. I thought I was going to spend $40,000 and I actually spent 40,530. So I spent more than I planned, so that is unfavorable. Okay, wages. Oh, there's a fixed and a variable. And so I'm going to do 7,200 plus parentheses $3 times 6,400 close parentheses. And then my actual is equal to 26,300. And then I'm going to drag that formula down. So it's my budgeted minus my actual, and this is spending, right? And so I thought I was going to spend 26,400. I only spent 26,300. And so that is favorable. We always love to spend less than we thought we were going to. All right, utilities also has a fixed and a variable portion. So I'm going to take my fixed portion plus parentheses, my variable portion times my actual liters, close parentheses, 14,750. And we're on utilities. So my utilities actual is right there. And so again, I'm going to drag that formula down. So it's my budgeted minus my actual. So I thought I was going to spend 14,750. I actually spent 15,000. So that is unfavorable. Okay, rent. That is just 4,200. And we actually spent 4,200. And so if I take, let's drag that down one more time. So if I subtract this from this, it's 0. There's no change. So this is none. And I would make sure you put a 0 in that box in McGraw-Hill, just because. All right, insurance is just fixed. And that's what we, because there is no difference. There's no variance, no difference. Okay, miscellaneous. It has a fixed plus parentheses, a variable times the actual liters, enter. And then what actually happened from miscellaneous was 12,890. And all of a sudden, Excel is filling this formula in for me because it's so nice until I don't want it anymore. So our budgeted minus our actual, and this is an expense. I thought I was going to spend 13,290, and I actually spent 12,890. So that is favorable because I spent less than I thought I was going to. Okay, so my total expenses equals sum, parentheses, just the expenses, close parentheses. And now, let's see. Let's see. I also want to do equal sum these expenses that actually happened. Be careful not to add the revenue in there yet. We just want the expenses. And so I take budgeted minus actual is 280. So this is expenses. I thought I was going to spend 101,590. I actually spent 101,870. So I spent more than I thought I was going to. And so that is unfavorable. Now, net operating income, that is always equals my revenue minus my total expenses. And then staying over here equals my revenue minus my total expenses. Now, I thought I was going to earn 77,600 minus what I actually earned was 69,670. So see what I said? If I would have subtracted actual from budgeted, then it would have been negative. But you just can't count on that because it just depends on how you subtract. So just look at the numbers and it's revenue. So I earned less than I thought I would. And so that is also unfavorable. And again, so this column, these are the numbers that I would enter into my homework and this column. And remember, in these problems, enter everything in as a positive value. Even if it is a negative, enter it in as a positive value because then they're having you use these descriptors to tell it whether it is an unfavorable or favorable. So enter everything in as positive. And that is all we need for question 3. Okay. All right, my voice is going. Question 4. So you have just been hired by Fab Corporation, the manufacturer of a revolutionary new garage door opening device. The president has asked that you review the company's costing system and do what you can to help us get better control of our manufacturing overhead costs. You find that the company has never used a flexible budget, and you suggest that preparing such a budget would be an excellent first step in overhead planning and control. After much effort and analysis, you determined the following cost formulas and gathered the following actual cost data for March. So again, we have mixed and fixed and variable, all kinds of things. So I am going to put all of this information down here in a cute little chart. Um, so this cost plus is my fixed. So it's 16,900 plus 0.16 per machine hour. 22,380 is my actual cost in March. See where I'm getting that? It's from this chart right here. So maintenance, 38,700 plus $1.80 per machine hour, and 73,900 is my actual. Okay, supplies. It's just variable. So it's 50 cents per machine hour for 11,300. Indirect labor. I have a fixed of 94,500 plus $1.10 per machine hour for 120,700. For what actually happened. Depreciation is 68 thousand, and there is no variable. And then what we actually did, which I would love to talk to somebody who figured out depreciation, why it was different, but it was. Okay. During March, the company worked 21,000 machine hours and produced 15,000 units. The company had originally planned to work 23,000 machine hours during March. Okay, so they just gave us three numbers. What do we use? Well, if you'll remember, when we're fixing a flexible budget, we're going to use these numbers, but we're also going to use the actual machine hours when we use it. So I'm only going to put in that 21,000 because those other numbers were just put there to confuse me. Okay, so required one, prepare the flexible budget. So first of all, actual machine hours. And for my utilities, it's going to be my fixed plus parentheses, my variable times my actual machine hours, close parentheses. Okay, maintenance, it has both. So it is going to equal my fixed portion plus parentheses, my variable portion times my machine hours, close parentheses. Supplies is just a variable, so I can just go my 50 cents times my machine hours. And I know this is everything is based on machine hours, and that's why I knew to leave the units alone because I just need machine hours. All right, indirect labor equals my fixed plus parentheses, my variable times my machine hours, close parentheses. And then my depreciation is what I think is going to happen. So that's why it's this one right here. That other one will come in later, but it's just fixed, so it's just that number. Now, be careful as you're adding these up. I don't want to include the machine hours or that'll skew my total. So I just want the utilities to the depreciation. To sum those, close parentheses, enter. Okay, so there's my required one is done. Now, they want to know my spending variances. And so we're just going to be comparing the actual cost in March to that flexible budget that we just created. Okay, so if I take equals my utilities minus my actual utilities. Okay, so actually, I thought I was going to spend 20,260. I actually spent 22,380, so that is unfavorable. I spent more than I wanted to. My maintenance is going to equal that minus that. So maintenance, I thought I was going to spend 76,500. I only spent 73,900. That is less. I love spending less, so that is favorable. Supplies equals supplies minus actual supplies. So supplies 10,500 is what I thought I was going to spend. I actually spent 11,300. That is unfavorable. Indirect labor. Indirect labor minus actual indirect labor. So indirect labor of 117,600. I actually spent 120,700. That is very unfavorable. Spent more than I wanted to. depreciation. What I thought depreciation was going to be minus what actual depreciation was. What I thought it was 68,000, and it actually was 69,700. So it's more than I was expecting. That is unfavorable. And then my total, I'm actually going to show you. I'm going to do equals sum because I have negatives and positives here. Not that I'm going to pay attention to that. And so I end up with a negative 5,120, which looking at this, all of these unfavorables, I know this is unfavorable because I only had one favorable. Okay, and remember again, input all amounts as positive values. So all of these, even though I'm talking negative, positive, all of them will be positive values when you input them into McGraw-Hill. I hope this helped you. Have a great week.